Hello, everyone. So today I want to talk about CPI, and also I want to talk about what it is that the whole Fed, inflation, interest rates, what does that really mean, and how does that affect the price of Bitcoin? Because we see this happen live. And I went through this, if you watched us last month, exactly what it means. So in 2 weeks, we've got a very big announcement from the Fed coming up. So this is something that you need to know about. I'm going to jump straight in. Okay, so let's talk about this. So first things first is we see that on the 10th, this is where we had the CPI data come in. This is where we saw inflation. Previously, it was forecast as 8.3. It came in as 8.6. This is above the forecast, obviously. And so what did we see? We saw a massive pullback in pretty much all of the markets, because it indicated that the Fed didn't have a control over what was happening in the financial markets. They didn't understand how bad inflation was going to be. You know, their predictions were way off. So what we saw again was recently, and this happened earlier on in the week on the 13th, so just 3 days ago, we saw that inflation again came over the forecast. Now, it was actually it was the same amount. It was still 0.3% over, or 300 basis points over what was expected. So it's again very bad news. The only kind of saving grace here is that now the market is kind of thinking, well, maybe the Fed are actually going to take this and they're going to do a 100 basis point increase in the Fed funds rate, which is there. And I'll show you this. This is the Fed rate monitor. It's the rate hikes. So how much are they going to increase the rate that it costs to borrow money? So, you know, everyone's talking about this. And this is more so, I will say, in the traditional financial markets. But we saw this massive drop on the 10th. This was the CPI. And then we see the Fed actually announce the increase in interest rate of 75 basis points. And that happened on the 14th. So this is where it was all being priced in. The market thought, okay, well, look, we're going to have a higher rate of borrowing, which means companies are going to be less profitable. Assets are going to give us less return. And so as a result, I want to pay less for those assets. So people were selling them. And we see it in Bitcoin. Let's have a look. We'll see it in not Ethereum. Let's bring up the NASDAQ, for example, which is the 100 largest tech stocks. So looking again, where are we? June the 9th, on the 10th, bomb. CPI comes in, it's over. We see that these guys are essentially going to be making less money, higher inflation, less people spending money, higher costs to businesses, and therefore less margins. And again, we see that massive drop. And so this is the NASDAQ. We can look at the S&P 500, for example. Have a look at this. And this is more like a line as opposed to an actual chart itself, but we can see it's exactly the same story, really. So the whole kind of point around this is we want to understand how is this going to affect the price of Bitcoin. There's a little bit of news, and I'm going to go through actually something that I think is going to be quite valuable in us understanding where this all starts. So as a whole, Akeshi, good to see you back again today. AJ is not here today. I think he's not feeling too good, but I'm going to go through this anyway without him. I'm pretty sure he'll be back on tomorrow. We want to find out about that pi cycle bottom, where it is that's going to leave us, and have we hit the bottom for Bitcoin? So not today, but trust me, he'll be back tomorrow. Let me just quickly get rid of my camera so that we can kind of see this much better. Right, so here we are. We have inflation, which leads to rate hikes, which leads to less growth. But where does this all start? So everyone's been talking about this. This is pretty much the reason why we're having, I should kind of just, I'm going to circle it in red. This is the reason why we have such a bad stock market and pretty much all asset classes since the beginning of the year. So we all know, rub that out, see you later. We all know that obviously we had the COVID crash. We then had loads of money being created. Okay, so everyone's got money. Everyone's got a stimmy check. Fantastic. Print money. Do whatever it is that you want. We have loads of money in the system, which consequently means that your money is then worth less because, as you guys know, supply and demand, we end up with less value. Now, during this instance, this means that your money is going to be able to buy less, which essentially is how we end up with this bad boy, inflation. So inflation begins to get bigger and bigger and bigger. I will say there's two types of inflation, guys. So there is what is called, there is core inflation. Now, this is what the Fed are worried about. Then there is CPI, Consumer Price Index linked inflation. Now, the Fed don't actually care about this. So the Fed are actually like, don't really care. But this is what you and me have to worry about. The difference between these two is that CPI includes energy, and also it includes, you have to forgive my writing there, and also food. Now, what are the two things, or what's the major event that's happened this side of Christmas that has determined the price of energy and food? Well, we've seen the two largest producers of wheat and grains in the world essentially shut off their exports because that's Russia and Ukraine going to war. And also, how has that affected energy? Well, there's a massive energy shortage because there's so many sanctions placed on Russia. And now at the beginning of this week, Russia turned off the gas tap to Europe, which could indicate that it's not going to be turned on. And this is why we're seeing the euro become much, valued to such a lower degree. It's because we are this lower supply, I should say. Anyway, so this then leads to rate hikes. So as countries try and get inflation under control, we then have rate hikes. So this is an increase in the rate of borrowing. So how much does it cost? I just realized my mic might have been further away just now. But here we go. So do they put the money? I'm just going to answer a quick question here. Charlie Thompson, do you think they will put the money printers back on if the dollar gets too strong? I don't think so. No. Because I think they actually quite enjoy the dollar being stronger. You know, at the moment, a part of the reason why the dollar is stronger is because in Europe, for example, they have to buy energy. And since there's not much on the market because of the whole crisis with Russia, which is their primary supplier of energy, Europeans have to sell loads of euros in order to buy dollars. And that's why the euro is so low relative to the dollar. They have to then buy loads of dollars so they can buy gas and oil because it's all priced in dollars, for example. But, I think the US is enjoying the dollar being very strong, but I don't think it's going to last for very long. Plus, also, in a whole global crash, what market are you going to invest in? You're going to invest in the strongest one, which is the US, and that's why money is flowing into there. And treasuries, for example, are very popular. Esteban, that's the price you pay in the after party when you use hard drugs to maintain the phase when it's not natural or possible. I imagine you're talking about that massive run that we saw during 2020 and into 2021 as well, where everything just got very, very excitable. And now we have inflation and rate hikes as our hangover. But you're absolutely right there, Esteban. So what we're seeing is, so rate hikes. So the Fed then say, look, inflation is getting out of control. We do care about this core. And guys, just remember, they don't care about your energy. They don't care about your food. So they care about core inflation. And since this is still higher than expected, they increase the rate of borrowing to try and bring the whole economy down. So they want to make the overall economy a little bit smaller. I don't have my pen. So they want to make this a lot smaller. So my writing is going to be awful, but I'm going to be talking you through it. So in order to do that, they're increasing the rate of borrowing, which ultimately means companies are going to borrow less. So they have less R&D. They have less hiring. And you can see this, even it's not just crypto companies that have been, reducing their hiring. Loads of big multinationals are reducing the amount of people they hire to pretty much zero and also cutting back their teams. Even Tesla have done it, for example, quite famously. And Elon Musk got a bit of, stick for it. But also, they're going to be taking out less loans, So essentially what we're going to see is we're going to see smaller growth from these companies. Now, the reason why we're seeing for example, the NASDAQ and the Bitcoin. So let's take the US 100 and we take Bitcoin, for example. The reason why these guys are affected by all of this, more so the NASDAQ, is because when you buy stocks, you buy them from one of two reasons. Either you're buying a stock because it pays you like a dividend. So it's either like a dividend, which we have the same thing in crypto. In crypto, we have lending platforms. So these are things like Celsius, where you basically give your crypto, they give you a guaranteed return. Or you have liquidity pools, or you have any type of kind of lending of your crypto. Basically, you give them money, they give you a guaranteed return. And that happens in not just Bitcoin, obviously, but also the crypto world. Think about staking, for example. So that's what you have for kind of the dividend side of things, how it's very similar across both. But also then what you have is people might buy because they want just crazy growth, And this is especially why the NASDAQ has been affected, because typically tech stocks don't pay a dividend. But what they do is they grow like crazy. Think about Google, Facebook, Amazon, Netflix, anything. The market cap is so much bigger now than what it was even, I'm going to say 3-4 years ago. And imagine we're going back 10, 20 years. But even in the past few years, they've had crazy amount of growth, which means that the reason why they're getting this is because they're spending so much money on the likes of hiring the best talent, taking out loans, spending loads on R&D, and they're growing their platform to such an extent that this is what an investor buys. An investor is buying this growth. And so we're going to see exactly the same when it comes to crypto. And so this is, think about, we're going to put Dogecoin, for example. I don't want to, but it is very similar. So, Dogecoin, obviously, it might not have any particular value now, but you're betting that in the future it will. So this is why, look, we see the US 100, all the tech stocks, these have fallen arguably the most. Some of the more stable ones are, in fact, obviously energy, but dividend-paying stocks. So we'll see those do well in this type of economy. But in order to get this lower growth, this is where we have the Fed, increasing that rate of borrowing. So where does this all lead us? What are we hoping for? Basically, we want to find the bottom so that we can invest, and then we'll be able to make money once the stock goes back up, obviously. Now, I'm going to put kind of Q4 as the bottom. And you can quote me on this. I'm recording it, so it's fine. You can quote me on this. But Q4, I think, is going to be the bottom. And this is because in terms of the stocks, I think initially we're going to have some of the pricing come down. I've gone through this before previously, where, if your earnings, you have a price to earnings ratio. If you're earning like $100 through your company, and I'm happy to pay like a 20 times multiple, that means that your stock is worth $2,000. But if initially the economy starts to collapse or it starts getting tightened, you usually reduce the price to earnings ratio. This is very common across stocks. So if you're still earning $100, but I'm now only going to pay a ratio of 10 times extra to buy your stock's worth half as much. But now imagine if the interest rates begin to affect your business and you don't borrow, you don't invest, and you only earn 70. Now that's why at the moment, right now, guys, we are seeing a massive tightening. And this is a lot of worry across the stock market. And also it's weighing on the crypto market, is if these companies don't earn enough, then obviously their stock is going to fall. So you have two phases of a contraction before we get into a recession. This is going to be for stocks. You see the price to earnings fall, and then you see the actual earnings. So we're going into earnings season. And so if your earnings are less, then you end up going from 2,000 just to a $700 stock value. So this is what I think is really going to destroy the market. And this will be finished in about 8 weeks, I believe. So, no, not 8 weeks, sorry, 4 weeks. So, in about 4 weeks, this is where we're going to have earnings season finished. And then I think we're going to see a little bit of pain and then people beginning to price in what's going to happen. And so that's when I think we're probably going to have a bit of movement to the upside. So I mean, I don't know. Let me know what you think in the comments. Am I crazy? Have I gone mental? I don't know. I mean, probably is the answer. But I'm going to say, because of what we're seeing, let me just bring back up this on the screen. So because of people talking about, hey, there's going to be a really high, Fed rate decision, so increasing the borrowing rate by such a crazy amount, it might actually bring inflation under control. Now, these numbers have been fluctuating like crazy. This is a 75 basis point hike. This is a 100 basis point hike. And this shows the likelihood of us having that. Yesterday, it was 50-50. And today, now, people seem to think, oh, well, maybe we're only going to get a 75 basis point hike, which, I don't know. It's really hard to tell. And I think it's going to depend on some of the news that we see coming up. I will get to another couple questions. So meaning they maintain the system by printing money and then it goes down. Yeah. I mean, look, this is exactly what did happen when we had the COVID crash. We're very familiar with that. It was very painful, but hopefully they don't do it again. I don't think they will. So Gurav, good to see you again. Do you think the USA will see negative GDP for Q2 in the report to be published? Do I think they'll see negative GDP? Do you know what? I don't think so. I don't think they will. But that's only because of the employment that they have. They have quite a high rate of employment. I believe it's like 3.5% unemployment at the moment. Now, I know that they want to get unemployment up because in order to kind of shrink an economy, you need to have unemployment up. So they actually have targets. Their target of unemployment for this year is 3.7, and then unemployment during 2023 is 3.9, and at the end of 2024 they want it at 4.1% unemployment. So the government are trying to get higher levels of unemployment, which I know sounds crazy, but that is what they feel is going to bring the economy back into a much smaller state, and therefore inflation will come down. Just in the same way they're trying to kind of choke the amount that companies are spending to have a prosperous, should we say, I don't know, business, because that's going to bring inflation down. If it happens, we will technically be in recession. Yeah, correct. Yeah. And that's the thing, like being in a recession, we could be in a recession right now. It's just only technically classified as one once you have 2 quarters of negative GDP print. So yeah, I don't actually know about that. Expecting the pump on the ETH merge. Very good point there. I do expect a bit of a pump. And I think yesterday we did see a pump in Ethereum. I'll bring this up. And let's bring us, I pressed space last time and it brought me to ETH. Nope, not going to work this time. Ethereum USD, here we go. Let's have a look. So I think we did have a bit of a pump. This was in anticipation. So we saw this yesterday, didn't we? Yes, we are bouncing on technicals. As you see, there's obviously a technical level here. I can just draw this quickly on here. We do have these technical levels, which we're trading in between. And kind of here, this was we'll call it a little bit of a fake out here. But even you can draw this back through to here, fairly straight line. We are bouncing in these the trading zones. So that is one thing to keep in mind. But people were talking. We had a date yesterday, which I've now forgotten, but I believe it was the 19th of September, I want to say. If you guys remember, let me know in the comments. I don't know why my memory is so bad, but I'm thinking, from what I remember, it was that. And so that's why I think we saw a bit of a pump. And we will see more of a pump in the run-up. Like I remember Cardano, it got delayed, but it got delayed, which is why, the pump kind of came, but then also went. So we had, at the beginning of this month, this was supposed to be the launch of the new, I think it was a test net. A new main net. Let me look at CoinMarketCap. And you guys can, obviously use any of these websites I bring up if you want to keep there we go, a tab for yourself. But the Vasil hard fork, this is what it is. We were expecting to see that. It was supposed to be 31st of June. They pushed it back. So, this was supposed to be 31st of June here. But around about the beginning of the previous month and around here, we saw a bit of a pump because there was news and everyone was like, oh, actually, I want to be in. But, consequently, it didn't hold, which is a bit of a disaster. But we did have this pump because everyone thought, oh, we got to got to buy in before the merge. And we're going to see the same thing in Ethereum, personally, I believe, anyway. Next question I'm going to jump on to. I expect pump, to merge. Why are the comments disabled in the videos? They are not, Esteban, as far as I'm aware. You can comment on, it's just whenever something comes through on live, that goes into the live chat and it doesn't sit on the comments itself. So if you rewatch the video, I believe it's on the right-hand side. But have a look. I should say. Comment is not disabled, no. Thoughts on Mt. Gox Sega soon? 150 Bitcoin is a lot of selling pressure with no mania to absorb the supply. You are absolutely correct, the Master LL. 150. I'm glad you mentioned that, actually, because everyone was saying about initially there should be, I think, 850,000 Bitcoin that was initially stolen but meant to be given back. As far as that's concerned, the guys, so basically all the investors had two choices. They said, look, they said, I love that. Yesterday was 15th of July. Thank you. Like I said, my memory's not that great. But I do know it's 15th yesterday. Thoughts on Mt. Gox, 150,000, like I said. So 850,000, I believe, was the total amount. And then they said, look, you can either wait until the end, and at the end, you can see whether after all the legal proceedings, everything like this, you get a bit more than what we're initially offering you, or you could take a smaller portion now, but it's guaranteed because they have 141,700 Bitcoin on hand to give out. Plus, they also have a couple other coins and some cash as well. But I don't think that the people who get their money back will dump onto the market. Even if they could, even if they did, I don't think it would be that bad. We would see a new all-time low, I believe. Yeah, we would see a new all-time low. But, there's been other days where 150,000 Bitcoin have been dumped onto the market. But I don't know, just if you put yourself in that person's position, you've just got your Bitcoin, you've been, kind of annoyed about it. I would personally think, unless I need that cash immediately, which, if I haven't had it for the past few years, I'm not going to be like, oh, I really need it, because I don't need it. I haven't had it for the past few years. I don't need it to pay my rent type thing. So my thoughts on that would be, look, I'll just wait until the market goes back up. If I've waited for 6 months already, I'm going to wait for another 6 months. So that's kind of my thought on that. I don't think fully, if it did, it might be bad. But if the Fed gives 75 basis points, I don't think anything will happen with 75 basis points. I think that's what the market is currently pricing in. So I don't think anything would happen. It's weird because I think we're now at the stage where everyone's ready to buy. Everyone wants to buy. We've been in a bit of pain for a while and we're now getting close to a bottom that I think realistically, if we see 100 basis points, that's going to be like, look, it's really bad. We know stocks are not really going to grow for a while, but they've done something significant. And that makes me want to buy because I now see a turning point in what the Fed are doing. Yes, we might get another month where inflation is above target or expectation, I should say. But realistically, it's pretty severe. And that should get us to around 3.5. If they do like a 75 basis or 100 basis point, I do think that realistically, we will have quite a positive reaction to that. I'm going to say that's going to be a good indication. The Fed has a handle on inflation. We might have another print where it's above expectation, but we're going to start seeing kind of a little bit to the downside in terms of inflation, that coming down, coming under control. And like I said, they're going to get to around 3.5%, 4%, where their normal target is like 2.5%. So, if inflation usually targeted at 2.5%, kind of, and they got the rate at 4%, I think that's actually going to be quite good for the market. And then we'll see a bit of a pump. And, guys, I'm not going to say we're at all-time high. Everyone, buy all of the Bitcoin that you can, because there's also talk about halfway in between cycles is when we see a bottom, and that's the halving cycle. That actually indicates, I believe, to next year. So I think around September or so of next year is when we have halfway in between the halving cycles. And this is just off the top of my head, guys. So, I'll come back with some more research. But typically people say that's where we have the true bottom. But I think Q4, we're going to see a bit of a pump. Once we have that pump, everyone's going to be a bit excited. It's going to be a great trading opportunity. Buy some, maybe you can get out later on. But that's kind of my thoughts on that overall thing. I don't know if we've hit the bottom just yet. I won't sell except I need the cash immediately. Looking at the all-time high of Bitcoin, would want to sell low. Yeah, I mean, look, I don't think we're going to get to all-time high in this particular cycle, but I do think there's going to be a hell of a lot of trading opportunities, on the way up. But we just can't get greedy. I don't think August CPI print would be larger than July as one commodities and crude oil. Yeah, correct. Yeah, so CPI, I don't think so. The question then is looking at core. So like I said previously, guys, get rid of that. Looking at these two. So this is actually what the US, what the Fed are looking at. And obviously, so CPI, I agree with you, Gaurav. I believe that CPI probably won't hit above a 9.1, maybe a 9 handle later, which is like 9% on the dot. But I think we're actually topping out at that level, because we can look at like wheat. I think this is the let me look at there's a wheat ETF. Where is it? Wheat ETF. It's just called wheat futures. Let's have a look at this. So okay. As you see, look, invasion, bomb. This is when everyone got panic. A bit of a double top here, technically, around that 1,280. But that is now falling down, Gaurav, where very well noted. And then if we look at Brent, for example, which is UK oil, looking at this, prices are on the way down again. So, obviously war, supply, everyone's worried, don't know what's going on. And then consequently, prices are falling down below $100 a barrel. So now everyone's talking about, well, actually, are we going to be able to get any oil from other sources? We don't know. So CPI, I think overall CPI will come down. But unfortunately, what institutional investors and the Fed look at is the core inflation that we see there. So that's something that we should all be a little, I guess, aware of or cautious of. Bitcoin just made a little pump. Let's have a look at this. Let's have a look at the pumpy. BTC USD. Here we go. I'm on the daily. It doesn't look great on the daily, does it? But we did see. So, AJ's been talking about the pi cycle bottom. Typically indicated a bottom, but this was lower than here. So I'm interested to see his take on this. Usually this is where we see a big area of consolidation. I know I'm on the daily, so I'm gonna have to go back like miles. But you see, so this pi cycle bottom here, this was the actual bottom it predicted. And then further back here, this was the actual bottom that it predicted as well. So I don't know how this is going to react, whether we just kind of like jump over and below. But there wasn't as big of a concern around inflation at this time. This was just more like a cycle play, as opposed to, everyone worried about a global recession. But anyway, let me bring this onto the 15-minute, have a quick look. That's not really worked there, has it, guys? Let me just zoom in. Here we go. I'm on log as well. We do see a little pump. Hello. It could be that we are looking at people placing orders prior to the US Open, which, by the way, guys, obviously the US market opens in half an hour. So be very well aware of that. And also, what's the time in the UK? So the UK is now 2 p.m. Yeah, their market is still open for a while. So European markets are open for a while. This could be, I'd imagine, some institutional guys playing around with the fact that the US is going to open in half an hour. We usually see massive periods of volatility just before the open and the close of the day. So if you are, if you are trading levels, be very careful. So I would always be aware of when the US, the UK, well, I say Europe, and also the Asian sessions, when those open, because we always see massive periods of volatility around there. And we can even have a look, like, where's this? So this is, I want to go to, what time frame am I on? This is 4 hours behind. So 4 hours behind, I don't know why that is. But anyway, bottom line is we're going to see lots of volatility. That's kind of all. And the Master LL, cool name, by the way. Love that. With the Bitcoin dominance trailing this low. Yeah. Makes me think that how is this cycle and next might be too different to make the all-time highs or lows not anytime soon. Yeah, you are right. I mean, one thing that I've always said is I think once Bitcoin dominance hits a hits a high and then starts to fall down, that's when I think we've seen the bottom. Because usually, we see Bitcoin dominance increase, Bitcoin hits a low because everyone gets out of altcoins. Once Bitcoin begins to pump, then we see the dominance come down massively. Like, this is what we see is the dominance comes down because everyone's thinking, well, okay, I've now, and this is the same when it gets to the top. Like, for example, Bitcoin goes to the top, all-time high, or it's got to as far as it's going to go. Money then, people cash out of Bitcoin and start putting that into the altcoins. And as it goes into the altcoins, that's when we see dominance fall. So at the moment, it could be that people think that the Bitcoin bottom is in. And so they say, look, I want to buy crypto because once Bitcoin goes up, the rest of them go up. So if people believe Bitcoin is going to go up, then people are going to be buying. But do you want to buy Bitcoin, which is not as volatile as altcoins? Well, if you're looking for pure return and maybe not so much safety, you're going to be buying those altcoins because they're more volatile, smaller market cap, you get higher gains. So that could be why we're seeing Bitcoin dominance fall if people feel certain that the bottom is already in, and then they're buying those altcoins to have more of like a long-term play and more of a higher volatility play, I should say. I'm opening some little longs for the next hours. That's very good to hear. Obviously, make sure that what's the number one rule, Esteban? If you leave me a comment, if you could tell me the number one rule, I want to. I think I might do like a giveaway, or we're creating a course, and we are going to kind of put down some of this knowledge. We also have Esteban. Yes, you are correct. What's my phrase though? I mentioned it yesterday. Gurav, he's got it. Always use protection in all aspects of your life. Number one rule. I think I'm going to get a t-shirt and print that on there. But you always use a stop loss, obviously number one, but you already know that. So yes, we are creating a course. So we're going to take a lot of, different aspects that we use to analyze some of the markets, whether we talk about even last month when I said, look, the CPI is going to crash the markets. And then it did, you saw it live. There was a stream. I was doing it. Never eat yellow snow, Charlie Thompson. You are absolutely right. That is very true. Never eat yellow snow. And so we're going to take all that and we're going to put it into a course, and we're going to actually make that free for anybody who wants to get involved. So it's going to be coming out relatively soon. We're working on that. We've also got a couple other guys. As you guys know, we're linked with another big YouTube channel, but I'm going to give you more information about that later. So it's very interesting. It is very interesting. So we're super excited about it. Let me answer Gurav. Here we go. How is Q2 earnings report going on so far? So far, there's only been, there's two questions there. Firstly, I'm going to answer the earnings report. So earnings report so far, there's the major ones have been banks. So usually it's like the section, the clump at the moment, yes, we have had Delta, and yes, we've had a couple other like big companies, but usually at the moment it's mainly banks. JPM didn't perform as well. Citibank performed very well, which I'm actually surprised. Well, obviously I'm not surprised about Citibank, but I'm kind of surprised about some of the other companies, because if you think about it, who are the people who are benefiting from higher rates of borrowing? They charge higher inflation. Higher rates. They charge more money for you to borrow. So they make more money. And that's the banks. So I imagine they're going, if they haven't already, which it kind of seems like some of them have, some of them haven't. If they haven't already, next quarter is going to be absolutely insane. But like I was mentioning earlier, guys, first, when you're looking at the whole price of a stock, you have the earnings times the earnings ratio, the price to earnings ratio. That begins to drop first. And this is why Michael Burry predicts that there's still a 50% drop to come from the stock market. And that is because once you have the earnings ratio drop, you then have the actual earnings, which is what's coming out now. Once that drops, then we see the whole market collapse. That's why he thinks there's another 50% drop on the way. So far, it's kind of going okay. It's kind of as to be expected. The overall kind of sentiment, though, is that companies will underperform. And as they underperform, stock markets are going to tank. People are going to say, okay, well, if I can't get a return from stocks, I'm certainly not going to put my money into something more risky like crypto, or even, NASDAQ and stuff like that. So that's the overall view as to how it's going. And the Michigan index. So guys, in case you don't know, the Michigan index is I'm having a right mare here. Got too many tabs open. The Michigan index came out yesterday on Friday. So this is each month 500 people minimum are interviewed by telephone. And these are all from American households, except the guys where, Hawaii, your life is just kind of too good, so you don't really count to the American people. And Alaska, you just don't count to the American people, apparently. I don't know why, I imagine they're both great states, but I don't even know if Hawaii is a state, actually. Let me know in the comments if it is. I know Alaska is the biggest one that they have. But anyway, there's 50 core questions, and they track a different aspect of consumer attitudes and expectations. Now, this basically says, okay, how well do you think the future economy is going to be over the near term? And so the forecast, so previously it was like 50. This, I think, is a relatively good indicator. And I think this is why we're seeing some of the markets kind of, what should we say? Not pump, because they haven't pumped, to be fair. But the kind of the sentiment is that, over the long term, I think things will be a little bit better. We see a kind of a downward trend here. And I'll see if there's like a proper write-up about it. Which there is not. But basically, I think this is going to impact the market. This is something that people, the guys on Bloomberg, I should listen to that more. I don't really, I can't tell you too much about it, like everything that it means. But basically, this is an idea of the US people. What do they think about the overall economy? 51.1, I think, is a relatively good forecast, higher than what was expected. And that's kind of all I can say about that. I'm not going to try and lie about, how much I know about it. But overall, the expectation is, look, guys, it's going to be kind of bad, which we want more bad news so that the Fed do something drastic, so we hit that bottom. That's my opinion anyway. It's going to be bad for the US people, but I don't live in the US, as you can probably see by the palm trees outside. But yeah, that's my overall view. If there aren't any other questions, I feel like I've been rambling on. I've been on for 40 minutes. Can you imagine that? I can't believe you guys are still here. Thank you, though. It's good to always have you guys around, especially when I'm here without AJ. But anyway, just to recap, guys, like I said, we have earnings. They come through. There's two parts to that. Usually, so the Fed is worried about core inflation, doesn't include energy or food. So I think CPI will come down, as Gaurav said earlier. I think CPI will come down next month. And then beyond that, the market I see as a bottom in about middle of Q3, which is this quarter, or end of Q3, and then a bit of a pickup in the economy in the next couple months. So I'm going to say here, I might leave you with this. I will quickly answer the Master LL. So he says, thoughts of risks of layoffs to the overall economy. Well, it's happening. It's happening. Let me, like, Tesla slowing hiring. Well, we all know crypto companies have done that. That's very clear. So they sharply reduced the number. Or I'll just go companies. As you see, guys, I'm using Brave. Brave, not sponsored, but I do like them. So here, a month ago, tech companies slowing hiring or announcing. Alphabet CEO tells him they will stop hiring. This is what I mean, guys. I showed you this earlier when I said, look, typically R&D or hiring, any expenditure gets cut when we see these Fed rate hikes. So overall, we will see less employment. And so, Tesla just cut. So Philip, he's obviously in the US, somewhere near to a Tesla factory or whatever he does. Tesla just cut like 300 employees out here. Exactly. And so we're going to see more of that, which ultimately it's a good thing for the economy long term, but it's a bad thing for people actually living through it, obviously. But anyway, there you go. He's in California, sunny California. I've never been, but maybe I should. Is it worth it, Philip? Should I go? Should we all go? Should the whole Satoshi Society? We'll get Gurav, we'll get Aikeshi, Esteban, get Charlie in there. We'll go for like a little party down in California. Okay, so that's everything. Thank you very much. It's been great to see you. Tomorrow we'll come on and also we'll break down, like you said, some more of that price action, see how he feels about that pi cycle bottom. He loves that CCD. He absolutely loved that. The CVDD, that's the one it is, CVDD. So I'll give him I'll tease him about it tomorrow. Anyway, guys, thanks for the video. I will see you later.